I'm gonna start the recording. Okay, did you saw how big was the move today? it it ran up 333 pips. My God. So today closed me at 59 pips. Okay. I'm gonna explain you how I make this trade, even though it's 57 pips. But the most important thing that I want to explain you is how I manage my risk management. Okay, so in order to do that, I have, as I told you, I record my trades on video instead of my journal trades. It's on video. Okay, so I'm gonna I just play it right now. Let me change my mouse pointer. Mouse configuration. Let me see. Hold on a second. Okay, this is my mouse. Okay, this is my mouse that I'm going to explain you right now. Do not pay attention to the other mouse because the other mouse is when I record. Okay, I'm gonna play it. And okay, we are here. The I'm gonna pause it. The market dropped right at the open of New York. New York open dropped down, and we are heading to the demand zone. So I'm just chilling. I'm just waiting because for me to grab a sell is is pointless because it's too late to grab a sell. So I'm changed here. If you notice, I'm changed here to the M1 minute. Okay, in the M1 minute. So I'm checking right now that in the M1 minute, look at this. We are starting to make a rejection at the end of the demand zone, and also this is a key level of, this was the yesterday low here. So the price is start reaction on the, basically in the key level, right? Okay, let's because I was waiting the price reach here, because this because in this zone it was the 38 38 point. I'm gonna give you the other chart, the last chart. This was the 30 38.2 level of the Fibonacci retracement from from here. I'm gonna on the daily on the daily. I'm gonna explain you here. This explanation is gonna be great, bro. From this low to this swing high, we have exactly the this 3.82, the Fibonacci retracement, right? And the price went down, and it was for a few pips to read. Actually, I put a star here because I was thinking to to make a long from here, right? My long, my bias was, you know what, I'm gonna make a long here because here is gonna to make a fake out breakout to the shorts, and then I wanted to grab from the lowest, make long to this top. This was my today's play, right? But at the end it's turned out different. But that key level, I wanted to show you that key level. It was so I mark my point of entry here, but we have to react to the price. Okay, So I saw that the price was starting to react before reach here. So um, I was actually look at that. This is the bottom channel. I'm changed to 30 minutes to see this is the bottom of the channel. We have to be very patient. We are already in the key zone, in a very key zone. Look at this. We have volume here, very nice, strong candle. Oh, really? Okay, let me see. Let me see. Oh, yes, why? Okay, let me change this one. Cambiar ventana. Oh, it changed. Now? Yes, right? Ah, okay, okay. Let me. So, okay. I went down here. So we were here, right? So so this still waiting. The price reached my point of entry. Still waiting. And I see that I changed to 50 minutes to see if the price, what do the price at the moment to reach here in this channel bottom or support. And as soon as almost close, it went up. The volume in 50 minutes is a lot of volume, sales volume, but I'm gonna change in 3 minutes, 1 minute, and 1 minute. What we have in 1 minute? A bullish candle, engulfing candle, engulfing candle, and when this high pass this high, 1 minute past this high, for me I was saying, chin, motherfucker. I missed my long, so and I see to 1 hour a clear rejection in 1 hour. So I changed to, you can manage many times. You can handle two screens, one in 1 hour, but this is how I do in one screen. So I mark here we have a fair value gap here. I already filled up, so I'm still waiting. So analyzing the chart on the go, I'm gonna mark here. Oh, what the 1 minute channel left fair value gap here, a gap here to filled up. I'm thinking if the price goes up around here, I'm in the longs. Actually, I wanted to buy here, but my entry pushed up because of the slippage. I pressed the buy button here, but the broker, because of the spread, opened my entry here. So you're gonna see it. Okay, we are in the trade. You're gonna see right now. Now we are in the trade in the longs because already the M1 candle fill this gap. Okay, fill this gap, and my, oh, you have to see this. You have to see this. This is my hard stop, as I told you. By my original stop was here. You're gonna see now. Because I know if the price is going below this low, even though it's very tight, it's pointless to hold it. It's pointless because will be drop. Remember that is we are in a downtrend. So we are in the first to enter this long. The long entry, uh, I mark here. Look at this. I mark here that this red line is this swing low, H1 swing low. That I'm thinking if the price reach here in this, I'm out. I'm out. Not here. I'm out because it's pointless. Okay, from there, and actually I place alarm alert exactly because be, why do I do we use alert? Because sometimes you don't want to close. Sometimes and it's hitting you the alert tick tick tick. Okay, you have to close it. That's why I use alert. Okay, we here in M3. We are one of the first to enter this long. For me, my entry point was here, but due to the slippage, was over here. Okay, my but you have to see that my preferable entry was here, but I have to react in the to the price. Okay, I wanna see. Okay, I'm placing here my M3, my MetaTrader. Where is located my this is M1, M1, this is M5. Where is located my stop loss? It's not anymore here. It's around here, more or less. Oh, here in the red candle. It's or I move my stop loss below below this swing low because it's already filled this gap, remember? So there is no need that my stop loss, even though it's a few like 5.5 pips more below here, but it's no need to hold it because if the price pass this fair value gap that it already filled, my long is not my long is worthless. My long is not use is not working. Invalid. That is the word. So that's why I put my stop loss here. So it's not anymore here. It's around here, more or less. So you have to look of the beauty of the amount. If I lose here, I think like $40 maybe. Yeah, it worth the risk to go in the game for $40. Come on. So most of the traders are waiting with this bullish candle, waiting with a buy stop right over here. But for me, it's too late. For me, it's too late because my stop loss should be up until here. So it's a lot of stress, it's a lot of money. So I'm watching adjusting my entry, adjusting my alert. You have to see adjusting my alert. This was very critical for me. I'm adjusting my stop loss. I think it was like I don't know 5 pips from here. But was very tight. Look at this. But I do not. I move just a little bit in order to not close by a slippage, by a spread, and I'm firm. I'm firm. I'm not moving my stop loss anymore. I'm strict to that, and I'm willing to risk only here is like $57, right? Because I know below this one, now I'm pretty sure that is the price go below this one, I prefer to lose around $60 than $200, $300 if my entry is from here. Everybody's waiting to place the long button from here, the longs from here. Everybody's waiting to break this candle. I prefer to lose $60 or $100 at the most, instead $300 from here to here. You know, I'm gonna I'm gonna move it. I'm gonna forward. I'm adjusting my exact entry, but you have to you have to know the M1. Screenshot my exact entry. So right now I'm very sure that I'm gonna lose only $67 or win a lot. All right. So it worth the risk. It worth the risk. We are in demand zone. We are in the yesterday low of the day. We have maybe here from here to here we have around 10 pips. The market is still pushing down, but you have to stay firm. Uh, When it made this low, I'm pretty sure that if the price break this low, I'm out, because no, it's pointless. It's pointless to keep the to and some traders respect this low also. Put the stop loss here. Why? It's it's pointless, you know. In this stage, I was pretty sure that I was gonna stop out, frankly speaking, because of this week. It said, "Oh my God, I'm gonna stop out," but the risk is is very good. It's low risk, huge reward. No high risk and high reward. That is the worst thing that you can do. And I and and I start to manage my reducing my stop loss. Mm. Yeah, everybody was selling from here. Everybody was selling from here. I'm reducing, even though I also am afraid also, because it has a very big momentum. But this is, I'm gonna change my, I'm gonna explain you. This is why technical analysis is very important. Your charting is very important, because what I saw is the in H4. Can you see my screen? Ah, yes. In H4, the price went in this channel. The pr- do, can you send me? Can you see this video? Okay, okay, okay. Let me change. This changed the the windows automatically. Okay, let me check this one. Okay, okay, this one. So it's very important for you to know where you are. I know that this is very crazy drawing, but I kn- my feeling was to go long because we were here in the. I'm gonna explain you here. This one. This move. No, this is a demand. H1 demand, a very rare demand because it, here we have a gap. You have to know your levels. You have to know that we are in the 0382 of the Fibonacci daily Fibonacci retracement, right? We are in the this channel. This channel, we're already in the bottom of the channel, right? Even though the price already broke the main channel, it it is in the bottom of the channel and the wicks and it's making the chart is history. So you have to know that from here, from 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 here, bullish. The bulls came in, then went up, dropped down, and above the Fibonacci zone came up. Then retest came up. So what it came the days before here came up. What is the probability that we are in the same zone and do the same thing? High probability, right? So that's why confluence, downtrend, bottom, demand zone, and you have to see the historic data in the chart. So that is why. Okay, let me show you the image. Oh, hold on. Yeah, yeah, yeah. Oh, hold on a second. Okay, okay, and okay. So let me go back. That's why I was believing in this long, right? So that's what, and also this long it make a higher M1 minute low. This is low is higher than this one, right? Okay. Okay, I'm still in stop loss, risking stop loss, but less. So I'm gonna forward. Okay, we have momentum. I'm reducing my stop loss below this swing low because once again it's not necessary to hold it around here. If it broke this low, it's because it's gonna drop down. Okay, I'm gonna I place it here. I'm checking in 5 minutes. Everything is bullish. Here I decide to place me in break even. So I'm willing, even though I'm willing to this. Here we have a swing low, H1 swing low. From here I'm expecting that this rejection. From here I'm expecting this rejection and hoping to the best to go because I'm watching here that we are up, the candle it's above the 0.5% of the Fibonacci retracement. It's above. We were in the 0.382 and right now we are in the 0.5%. All right, another screenshot. So let me hold it. It's dropping. It's dropping. So I at this point I'm thinking, okay, it's gonna it's close my break even. Measure. I have to measure how many pips I have. 30 pips. So I have to decide if I'm leaving or I'm holding. So I decide in this time that I'm gonna hold it but I leave a few pips in order if it goes down, do not close me at break even due to the spread. So, okay, I'm watching 1 hour, and 1 hour I saw this indecision candle in my target. Okay, you didn't saw. I marked 1 hour. The high of the 1 hour candle. This was my first TP because it was a indecision candle. This is my first TP. I put a star there because I'm saying, oh, it's reacting too bad in the swing low H1, but has to reach here. I'm very confident I want to can reach over here. This still M1 minute. This is H1. Look at this. The price react beautifully in the from this low to this high. I made the Fibonacci retracement and react beautiful in the 0.78% of the Fibonacci retracement like a robot. Look at this. So you have to at the end is going to it's like a craziness, but you have to understand your drawings. You don't care about the others. So here I placed my Fibonacci retracement from here to here, and I saw a 0.78 intraday Fibonacci retracement coming from the demand zone, coming from the low of the day, coming almost from the 0.382 from the daily Fibonacci retracement. Mhm. We have this another channel, the crossing of the other channel. So that is and also I have the other Fibonacci retracement from the swing high to the swing low to make a short. So I'm thinking if the short's coming, it's gonna come from this. I'm actually I'm using my Fibonacci extension in order to know the forecast or of this uh, long can go. It stopped me out. It's not it stopped me out earlier because of the trailing stop. But as you can see, today in the afternoon, reach this target. Look at this, beautiful. According to the Fibonacci retracement, because it made a beautiful pullback. This is a pullback in the 0.786. The Fibonacci extension, the target is 1.27 of the extension here. This is my highest target. This is my highest target. You have to make the analysis on the go too, also on the go. Well, this is how I trade, you know. This is how I trade. At the end, when I see the charts, I see empty. I don't pay attention to anything, only to the candles, because also it's a lot of noise. So I'm here. I'm really, really, really worried because here we have super, super resistance that using the volume profiles also confirming that we have a lot of resistance here. I'm watching how the 5 minutes candle closes in M15. So I'm watching the M15. If grows this low and this low, I'm out definitely because it's a huge rejection. But you can see in the M15, the candle is still bullish. The candle is still bullish, even though it has a big retracement, but the candle is still bullish. Below this swing low of the M15, I'm out. Or below this alert, I'm out. Even though with a small win, even though in the M1 we have a very bearish momentum with a pin bar, but in the M15, still bullish. Also, we have a lot of volume to longs. Um, and this part is it's oh my god, this is going to so what I did here is make in the I place this alert also in my MetaTrader here. It is below this support, this high, this high of the this M5 candle high is the price crossed. I'm out because it's invalid the longs. But some of the traders closed it over here, so I'm a little I want I'm a little risky guy, right? Because I have a good position, a good position. I'm not afraid because I have a earliest position. If the price close me a break even, is because it wants to go down, man. But the probability is that I have a good position. I don't have to be afraid. That is my psychological thing. And I said once again, trading in my mental mind that if the price break this high, all bulls gonna add longs from here. It made a higher low than this one, so it's going up. Thank God. Right now, my stop loss is in this is my entry. This is my stop loss in profits. A little profits, but it's not a losing trade anymore. Okay, we are arriving almost to my 1 hour high. Remember? hmm I was planning to close it there, but as I saw a lot of volume, I wanted the grid. Uh, uh, I went greedy and I want to hold it more, but you have to see how I manage my trailing stop because I saw a lot of volume, so I said, "Oh my God, this is it. This is the long that I was waiting all the week. This is it." So we are reaching the big WAP in the EMA of 50, 50 EMA. We are reaching to the first TP. This is a fair value gap of this downtrend. Okay, I'm ready to close here, but I have to see what it can do. This was a good trade, even though it closed me by trailing stop. but it is what it is. I'm placing, look at this, I'm placing my Fibonacci retracement to see where the shorts can come um, can come in from the zero. I'm thinking, okay, if the market is going to short, is going to fill this gap and going to uh, come the shorts from the 0.238 of the Fibonacci retracement from the swing high to this swing low. Also planning where the short look. Also planning where the shorts will come in. Not only go long. That's it. No, where the shorts coming in too, right? We are in the H4 confluence with support resistance. And because the market is trending up, but it has a low volume. Okay, this was my first TP. This is my second TP, and the above is was my last TP. Let me forward. Okay, we reach almost the last TP, and my mistake here was I didn't close here. That was my mistake. I didn't close here because I was pretty sure that the momentum is going to hit my second TP because this here we have a fair value gap to fill. My stop loss is my trailing profit is below this one low, more or less. Oh no, below here. So I'm watching very nice. I'm very happy for this trade, but I'm thinking I'm not gonna be greedy, and I will exit my position here. But I should be exit my position here, frankly speaking. We were here around 100 pips, more or less. I'm watching the shorts coming in, but I said if the shorts coming in will come in from this zone, so that's why I hold it. That's why I hold it this long. Another screenshot. Let me forward, and then it's dropping down, and I said, oh my god, it's a lot of volume, but it's reacting to this support. Look at this. Look at this. That's what I was thinking. Damn, I should have been closed here. Okay, I'm watching in 3 minutes, watching that it's reacting to this support area on the volume. So I can. The only thing I was worried about that here to here it was a fair value gap to fill. So I said, damn, this is gonna close me at almost nothing. So even though I'm very sure it's going up. So I moved down my stop loss, my trailing stop. I'm pretty sure that is the price do not react from this M5 swing high can shoot up. From this is my damn. I saw it many times that the price go to this week and shoot up. So that's why I placing my stop trailing stop below that one. I run. Look at this. I run another Fibonacci from this new low to this new high. This is very tiny Fibonacci. So I'm watching where is reacting, and what do we have? It's reacting in the 0.5% of the Fibonacci retracement. Look at this, beautiful. This is the 0.5% of a Fibonacci retracement. You have to take the risk. It's coming the bulls here. Came the bulls. I Now I'm very sure that if below this swing low, I'm not holding it. I'm very sure about that. And so my trailing stop is here. So I'm very sure if the bulls come in, is we are going to break this resistance. It's a lot of stress, right? Okay. So okay, here I saw the M5 close as bullish candle. So I'm watching that below this swing low. I'm out. So I'm watching. Okay, I'm thinking. Okay, I can leave. I can quit the trade below 60 pips. For me, it's a good trade from 60 pips. I'm place my stop loss below this candle, M5 candle, swing low. Because as you can see here, if this candle cross this one, it's pointless. It's going to the downside. It's pointless to hold it. So instead to place a new trade, to place a new add-on, what I do is analyze very good the chart on the go. So this is M5. This is a good setup for gold longs. A very good support, a very good setup because we are bouncing from the H1 swing low, from the Fibonacci zone, 0.5%. So it has everything to go long, everything. But that's why I hold it. Another screenshot. So I didn't like this this higher this slower high, this reaction, because it's like a retest of this one. Oh, so that's why. Oh, if this week was here, I'm not afraid, but it was making a lower high than this one. So I said, damn. So that's why I this one was here. Let me forward. I place my stop loss, trailing stop here. I place my trailing stop below this week. That is this one. I'm gonna forward there. This is M5 too. Securing profits below this swing low from this support. I'm I'm pretty sure I was fucking sure that it was going to the roof in this movement. Pin bar to the upside, right? Everything was going, everything so well. We are in the H1, M1. So I'm thinking, no man, if it crosses below this swing low, it's gonna to turn in right now. Turn around. This is the swing M1 swing low. Look at that. I'm gonna forward this and make a bearish momentum. The sales coming in, so it react to the H1's resistance, and it's going to close me at trailing stop. I give a little bit room, and boom, it dropped down. And look at this, didn't respect my stop loss until 200 bucks. That's it. So it closed me right over there, more or less. So I was done because here it was a huge rejection from the H1, this H1 highs. I was pretty sure that it wanted to fill this gap that left here, but I didn't want to hold it to know what if that from here to shoot up. So I made 57 pips, and that's it. Let me open the other chart. Okay, can you see it? The other chart. Okay, let me check. Uh, okay, this one. Okay, can you see it now? Okay, uh, can you see it now? Yes, right? Okay. At the end, look at this. At the end, the the price went to fill this fair value gap of M5. Here it was. Here we leave a fair value gap, right? This is a fair value gap, and from here it dropped down from here. Actually, if I wanted to hold it, maybe close me at break even or maybe not, but it's very risky, very hard attacks because it failed, went up, it failed again, went up, it failed, went down, reacting on demand zone, and then shoots up. Where shoot up? To my final, to my final target. Look at this beautiful. Um, from here, it was from here to here, reacting the 0.78. Remember, and the extension is not 100% precise, but can give you a forecast. The reaction in the Fibonacci retracement, the reaction of the 7.86 reaction can give you a potential Fibonacci extension target. Hold on. Extension target. Look at Fibonacci extension target of 1.2 of one. This was my. Where is it? Look at this. I have my. Look at this. Reaction as of here is in English. No, here's in English. Reaction in the 7.8 here. Oh, my mouse is very big. Reaction. Let me reduce my mouse. You can screenshot or whatever. And mouse configuration. Let me reduce the size of my pointer. Ah, no, decía el puntero. Mm, Here, okay. Okay, here. Reaction on the 7.86% of the Fibonacci retracement, we can have a potential of 127% of using Fibonacci extension. Where is where is that bastard? 1.1.27. Here. That is my. You can see here. You can see here. 1.272%. That is was my final target and was confluence to the yesterday high of the day. So that was my final target, man. But it closed me here. It was okay. No, where is close me? Round over here, no? Below this low. More, no, it's 57 pips. 57 pips. 57 here. Yeah. So I was thinking, okay, tomorrow I'm gonna go long because today is gonna consolidate, but no, the market went right through. It feels the fair value gap here. How do I know that it's a fair value gap here? I'm gonna teach you that. You have to go to that in 1 minute. This is a express. This is a gap, obviously, right? This is a gap. But in order that you have to be very 100% very sure, you grab this tool, you put it right over here, and you see the left side is longs, buys, and the right side is sells, right? We see from here to here, there is no, it's zero, 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 no buys, only sells, only sells. So from here to here, we have the exact gap of or fair value gap or imbalance or whatever you want to name it. Okay, so we have that gap. That's why that you use this tool, profile fixed volume, and also this this gap you grab from from this low M1. You have to also use an N1. Look at this. We have only longs, no buys. So it was the until and the gap was all this shit, right? The gap was all this shit. What did the price? What did the price? The price fill this gap, fill this gap on demand zone and went up and shoot up. This was the I didn't trade it, but this was the M1 first first advice pin bar volume. Let me see the volume. A pin bar, and then retest. The candle never crossed the below, and then try to retest again, and the candle didn't make a new low before this one. So this is it's very hard attack because you are in longs and it's very hard attack, you know. But okay, so my full position. I'm gonna send you the video. The full position. It was like this, as I show you. My full position was here. My first entry was over here, but was over here, but I was willing to exit my position below this low, as you saw it in the video. And as soon the price make a new low, I decrease my stop loss position to here because it's pointless to have it here. It's pointless to this win low, and then in the M1 when I saw that this make, I'm gonna move it. This made I'm gonna raise this one when it's made. Oh, when the price. Let me. Oh shit. ¿Cómo se borra? Bueno, okay. When the price make this new low from here, I place it not over here tight, but I place it right here. So, so how many pips we have here? We have stop loss. We have 6 pips of a stop loss only. And when I cross above this high, break even. Break. That's how I manage my risk. It's not about the profit. It's about managing your risk to trading. Everybody wants to earn more, but nobody thinks how to lose less. So that is a was my today's session. Even though that we saw everything, I think I don't know if you have any questions. I'm gonna send you the link. I'm gonna upload it to the YouTube. I'm gonna send you. You can watch it again many times. Yeah, the only that my YouTube channel is in Spanish for the Spanish people, but this is gonna be my first English uh, explanation video. But you can see also in there I'm posting my live trading in YouTube. I don't have followers, almost none of followers, but I don't care. It's like my journal. It's not. It's my journal. Also recommend you that you have also your YouTube channel. It's not because you want to have more followers, but you also do learn more if you teach new guys. Because if I in this I'm teaching you, I also learn. So in this case recap. In this case, my entry instead of here, my entry was should be here or in the yesterday low, and that could it be my entry. But anyway, this is was my today's session. My today's session is break the new lows, recap, retest the yesterday low, and fill the fair value gap, and let's go. You got it. Okay, man. You have a doubt? Yeah, you have to. Mhm. The key is the charting, bro. The key is the charting because many traders go, oh man, how can you rely on the chart or the simple channel? Man, the trading is simple, right? We don't have to. You don't have to. Everything is we have to do use our psychology. But for example, if we remove everything, we see that the H4 this candle never made this low never made a new low than this one. This low is still above this low, so it's still respecting the price of 37,178. Also, you have to check the price. Okay, so never came before below this one to 37. Never, never. Okay, okay. For example, like this week. Yeah, yeah, yeah. If the price w want to come down, there is a lot of liquidity below this low. A lot liquidity. If this uh, stop this, I grab this liquidity, I wait to came back to the Fibonacci retracement to fill this gap. Look at this gap. Actually, maybe tomorrow because look, maybe tomorrow because this low killed, make a equal low of this one, equal low of this one, and kill the liquidity of this low. Maybe shooting up, maybe shooting up to. I'm gonna erase everything. One, not erase it. One, I'm gonna erase it, remove drawings to. Oh no, hold on. To reach the to this daily confluence or daily resistance, and from here, let me hide the drawings, remove drawings. I know, hide the drawings, hide the drawings. Maybe from here to here. Fibonacci retracement. Oh, here. Let me remove the drawings. From here to here. Ah, fuck, man. Remove drawings. Remove drawings. Maybe from here to here. The daily resistance was over near here to here was reached the 7.86. Let's see where it can go. 7.86 is the Fibonacci retracement of the, hold on, 1.7 something, 1.2 is 78.6, 127%. Here, look at this. Maybe from here it goes, from here it goes down until here, 127%, filling this gap. What a coincidence. Right? But I'm pretty sure that we are bullish because I'm, even though it's dropping, still we are still, remember, we are still in the uptrend. What is the uptrend? This is, you have to analyze everything from here. Look at this beautiful. Look at this beautiful. From here to here, we are above the middle of the line of this channel, ridiculous channel, and simple channel. We are above the middle. So maybe if you have a retraced, we retrace. Look at this. Uh, 1 point, or if retrace at 0.50%, that is reacting right now, is that 200%. If the 200% is this near here, what do we have here? We have here a demand zone. You got it? So maybe or not maybe, or still bullish and wants to go to the next resistance, and from here decides to go to here, right? Because this is from here. I'm pretty sure that it's gonna break it, and I'm starting to selling from here because it's the historic. All the bears selling here, selling here. What probability has if the price reach here to sell, right? Even though to sell not huge, but to sell 100 pips, no, it's okay. So that is, but for example, look at this. For example, this is the general perspective. Fibonacci retracement from here to here, from the beginning to here, where it retraced to 0.78% or 0.6% from here, almost here. But let's take this 0.6%, right, of the Fibonacci retracement. Fibonacci retracement. So if we have a retracement of the 61%, we can have a potential extension of the 161.8. Let's grab the Fibonacci retracement. Let's put it over here. So the potential overall target is here to the, I think, to the $48,000. If it broke this one, goes from $48,000 using the extension and goes down. This is the overall, and we have to notice that this extension make, if the price maybe come down here to the 0.618% of the extension, maybe come down here, retest it, do not fill this gap, and shoots up from here to the next level of the Fibonacci extension, or even over here. So the overall trend is, we are in an uptrend, my friend. We are in an uptrend, but um, we are not swing traders, but it's good to know these levels. Okay. Yeah, we made an equal low, so a double bottom, so we don't know where's we we will see tomorrow if gonna go drop until here or whatever. I have to make drawings again. I'm not using funded accounts yet. I'm trying to build up my personal account. I made two challenges before. One challenge I paid, one challenge I got for free, and I didn't pass it, frankly speaking. And the one that I bought, I didn't pass it. I was over leverage. That's why I focus on how I can lose less, because that was my mistake. Because I was risking only 1%, but my stop loss was 1%, right? But using this, how I manage the risk, I using, for example, 1%, but I'm not willing to lose that 1%. I'm willing to lose 20% of that 1%. I don't know. You know what? Depends of the M1 minute swing lows. So it's not fixed. It's not fixed as we can. It's not fixed. For example, here depend, but I'm not willing to risk my whole position. That is the key. For example, here this was the long that I took today. So for example, I took this long. This is one H1, right? I took this long around over here. No, yes, around over here, right? My stop loss, I think it was below this. My full position was below this swing low, right? But no, no, I think it's less. My full position was below this one. My full position was below this one, but in M1, I entry here, right? I don't remember. I entry here. I entry here. I entry here, but my hard stop was here. And let me full full. Okay. Okay. My hard and according was developing this. I know it was over here. It was this one. My full position. I went in and one. I Where is the trade? Well, anyway, imagine I lose the track. My full position was below this H1 swing low, but my M1 swing low it was over here. So this is 30 pips compared the full position. It's very big, 74 pips. So I'm risking about 40% of my total entry, around more or less, right? And when the price developing, I'm reducing my stop loss. So it depends of the. So it's not what I'm trying to say is not fixed. If I'm, it depends of the swing lows. But I grab a major swing low that is my full position, and my hard stop is, as you saw it, according to the M1 minute swing lows. So, for example, if my entry size was $300, and I was willing to lose, if it stopped me out, I was willing to lose, I don't know, $150 more or less, or $100. And here I was willing to lose, according to this new low, I was willing to lose, as you saw it, $67. I was willing to lose $67, you know, but I do not hold it until here. Never, never, never. Or if the M1 made a new swing low, I do not hold it until here. That is hope. We don't have to have hope. If we know that the price breaks this low, yeah, it's gonna drop now. Yeah, it's better that, you know what, exit the position and you see a new entry, because with this stop loss, with this and this stop loss, you can have three three trades, three trades ideas. All right, and also if you have $300 here, uh, if you are making $300, you are thinking to close. that trade because you already made 1% of the day. Not even banks do that. Okay, so so basically this is a great tool because you can over leverage a lot when you have better skills. Over leverage a lot, maybe it's not $300. Maybe for me in the future it could be $10,000 and only risk $1,000. But when if I reach $10,000, I'm out. You know. So right now I'm building my personal account. I'm gonna show you later. There's gonna be a surprise because it's very hard to do because I'm making. Well, I'm gonna let you know is I'm making this more or less small account. I'm making 20% of my entry of my small account. One small account that I have, I'm making 20%, but I only risking, as I told you, around I don't know, like 5% more or less. When but every time that I win, I made 20% of my account. Every time that I lose 5% of my account. Overall, I'm winning more than I lose. Okay? Because if you go to the full position over here, because most of the traders, some friends told me, okay, why don't you go full position here? You can earn more, right? That is greedy. That is uh, greedy, and also it's not risk management because if it stop me out, it stop me out 1% of my account or the 20% of the account if it stop me out of the small account that I'm building. That is the key is risk management. So it's not a profits. I see it like back in the flip it. I trade my stop loss instead of my profits. Okay, man. Okay. Okay. Go. Take care, man. Okay, take care, man. Bye bye.